All right. Good morning. So I brought to you the weekly update. Um, I'm doing this video this Monday morning. Time. All right. So I tried to make this video this weekend, but my network was not good. I could not get connected with you guys. So, but nevertheless, we still have much more to do rather than procrastinating. So I might not be uh, constant with this audio as it's supposed to be, but I'm trying my best to make sure I am dishing out the information required to have a successful, a trading week. You might want to stick with me for this week, as I will try to make sure I did what I'm supposed to do. Regardless, I am not teaching you to be, you know, uh, to be uh, to always wait for me. So you can go into the market and learn so many things for your own self. All right, and you might also want to look out for my weekly, for my tutorial, which is a beginner videos I will do this year. I don't know when it's going to be this year, but I'm going to do a beginner video this year, which is the 20 to be my 2024 beginner video, and it's going to contain a whole lot of information which we all require. So, um, I, this is meant to be this video I'm doing right now is for the weekly market review. Because I promise you guys, I'm going to give you guys a weekly video for Euro and DXY. So the Euro US dollar weekly contract for the fourth week of April and the intermediate week between April and May have both traded and as an up close candle since the third week of April. So since the third week of April, this particular candle, which is the third candle, if you look from here, we have one, two, three. The third candle is the appropriate last week candle of this month, of the month of April. And this particular one is intermediate. We have the 29, no, we have the 27, 29, 28, 27, 28, 29, and first, second, and third inside this candle. So it's it cut across this that particular candle cut across the April and May. So and I'm not regarding it as the last week of April because this is the official last week of April. So this is the intermediate week that at the end of the 50, they say we have 52 weeks in a year, which is if that is the case, then probably we are supposed to have what 13 weeks, 13 months in a year, not 12 months. So all those kind of factors, there are things I cannot really deep down to discuss with you guys now, but there are important factors too if you want to really understand some concepts. If you try to understand your time and date, okay, the date is also time. It's just that it is the bigger version of time. All right, date is also time, but the bigger version of time. So that is it. Now, now the third week, which is the last week that cut across the April and May, have what deliver euro into the weekly bearish order block candle opening price. Now, euro have delivered into the opening price of this bearish order block, which I have been calling out for you guys. Although I've not been constant with my videos, but whenever I did the videos, I always make sure I point out this area of interest for you guys. So that this week, deliver price inside the opening price of that bearish order block. Why I did not use the low of the other block is because the fair value gap that was created here was done with a bullish order, a bullish candle. If this candle was a bearish candle, like a down close candle, which is a black candle, then we might have to use the low of this one. But nevertheless, this is also good and nothing bad about it. From the current price action and the weekly chart, we can see that EU has real and successfully traded into the weekly candle bearish order block opening price, which is an area of interest as it has also formed a complete price action with the monthly contract. Alright, if you look at the monthly candle, let me go to the monthly candle so that I can explain this for you guys. Now, from the monthly contract, we have formed. What did I say on my monthly review? I said it is more likely, it is going to be more likely that we are going to form an efficient price action between this current month and the January, February, March, April. So between this current month and what March contract, which is this, we are going to form uh, a complete price action between the May and March contract, and that has just been formed. Then, what are we going to look out for now? We're going to look out for the area where the high of this current month is going to be, and perspectively, the high of this month has already been formed. Which, if we go on a lower time frame, I hope this has explained that for you guys. So, if we go on the weekly time frame, we can see that the CPI that occurred last month or last week, sorry, this is why I am not doing this video recently. Look at, I don't know what's wrong with MTN, but before the thing changes, we can still continue. Now, if you look at the weekly contract, when it eventually go back to the weekly, you eventually see that this particular candle was traded on Friday, and it dips inside the weekly bearish order block, and now we have the traces of that area. So there is no reason now we are expecting to see this new week have the high, because there is no even news event this week that is capable enough to take out this high before we go lower. And again, there's no need for us to take for the market to take this high, as we have already been traded into a POI and also deep inside of it a little bit. So that is it for that. And so, and this whole thing is indicating that we can expect a bearish profile for the coming week, which is this new week that's already delivering. Right, we can expect what a bearish profile for the week, and for also for the month, which is the month of what May 2024. We are looking for what a bearish profile. So if you stick with me at the end of this month, I am going to give you guys a video that will teach you guys that that we have to reference you guys back to my previous month video and this week video. So we are looking for a bearish profile, that is a down close candle for the month of May, which will lead price into the sell side liquidity or the draw on liquidity. Our current major draw on liquidity is these areas of liquidity, which is this sell side liquidity, right? Not this one, because this we reacted off of a bullish, will I call it, yeah, a bullish fair value gap on a daily time frame that deliver us here. So when we come back and we price below it, we are going to retest on it, then it's going to deliver us back into this area. That is very, very important. Now, from the monthly observation and conclusion, the market profile is bearish and the possible high of the month has been achieved last week, Friday, from the NFP data that deliver the price swing, uh, the price swing on Friday. Now, if that is the case, All right, we are only anticipating, all right. But if that is the case, we will look forward to the coming Monday to be on a range and the Tuesday to form the high of the week for next week profile. Now, what I have anticipated for Monday, I don't want to go on a lower time frame yet, but what I will actually dig into this when I went like when I changed the time frame to the daily time frame. What I personally anticipate for this week is that the Tuesday, which is to right, I'm doing this video on Monday morning. The the Tuesday should have the high of the week since we have already achieved this, but the Monday was not on a range, like the Monday candle did not deliver on a range. So that in itself has disqualified that, and Monday is likely to be the high of this week. So, but we are only anticipating and only trying to come up with a reasonable conclusion about price. That is, set up a a ground that if price did not do this, it will do that. If price did not do this, it will do that, and that is how you know a real traders do. We don't just jump into price. We come up with uh, a reasonable conclusion that the right price. So in that is itself is what we should all try to achieve. All right, not just to jump into conclusion, but to come up with a reasonable perspective that okay, if price react this way, this is what I will do. If price react the other way, this is what I will do. So now what you are looking at is the dollar index, which is also always our major power indicator, right? So because we look at the dollar index, when if we are able to come up with what the dollar index is trying to do, then we can come up with a strong conclusion for the euro and even GBP if we trade what GBP. So now looking at the dollar index, we can see that we did not tap on the bullish order block opening price, but we have deep down inside it. And if this should be important, we are not supposed to see market price below the consequent encroachment of this candle week, since that is a reversal in of itself. And if you go on a lower time frame, we can see why we don't have to expect price to keep going lower. And also, if you take your Fibonacci tool on a daily time frame and you measure from this low to this high, you will have your 65% region around this area. Okay, when I go on a lower time frame, I am going to conduct all these things for you guys, and that is a deep discount. One a reason why we should not expect price to continue going lower, but rather we should take time after this market and come up with a reasonable conclusion. Now, on the monthly contract, the XY has also formed what a complete price action. Immediately, imagine that a new month open and the first thing we see is a sharp wick lower, right? And this is the today is like six, all right? Today is six, and we have already seen a sharp lower in price. First, second, third, and what first? That's we have just spent 6 days out of this month, and price has already delivered so bearish, and we have formed a decisive candle here, so which is a very good potential indicator that we are going higher, and this is our major buy side liquidity we are looking for the XY. And the next one is this particular swing high that's here, which is a very good lower time frame with buy side liquidity to look out for. Then when I did mention something that whenever we get above these two area, these two buy side and sell side, these two buy side, then we can now start anticipating and calling out some of these things I have put on here, and I'm going to make sure I tell you guys how I want the market to react off of this area, but it's still going to be based on the perspective of the market. Because if we see what is going on here, liquidity here, liquidity here, liquidity here, liquidity here. So whenever we get up here, it is going to be a sharp decline in price. So that will be discussed later. Now, before I give you guys the daily profile, which is I'm going to give you guys this daily profile for the Monday candle. All right. So I'm going to take this off. I don't need it. Even this, I'm going to take it off. Now, you see, there is a reason why I like this current market situation very well. It has set up what a series of what buy side liquidity. These two areas is a good buy side liquidity in price. And if you see what they are trying to show there, they are trying to tell the retail traders that that is an area of what resistance, right? Uh, and as a smart money trader or an ICT trader, we have already know that there will be a resistance here. Why? Because we have a volume imbalance here. And I call this out even before price gets here. That whenever we see price get into this area, we should expect a rejection of that area. And now look at how we rejected that area twice, which is that means a smart money trader can be is able to spot where a resistance is going to be even before the time, both on the lower time frame and in a higher time frame. You should be able to spot an area where there's going to be a resistance in price. Because if you are able to do that, you'll be in the safer side. Because now that they will think it's a resistance area, some of them might already see this down close candle as a very shorter block to sell lower, but that might not be the case currently. And whenever we have a very good news coming up, we are going to see that news is going to, push out all this liquidity in price. But there is still a higher tendency that price is going to react in a lower perspective, except we have a very high news impact, a high impact news that will deliver us so bullishly. So, taking my Fibonacci tool, I want to actually give you guys what I made mention of, how price has got to the 65% region. So that's the high, and I'm going to change it to my art. Yeah. So we have seen that the 61% region has been crossed, and now we are above 50% region, which is premium. We are getting inside the premium between this low range and this high range. All right. So if you are able to capitalize within this area, you should be in profit by now. And I myself did not trade because of the network issues, because I cannot be in a trade where I cannot check my trade and I'll have to wait. Except I'm taking a long time perspective trade. And if I'm going to take a long time trade, I'm going to wait in a long time to have my full confirmation of price. I don't know for you, but there are things I'm waiting for, right, on a lower time frame from the 4 hour to the 1 hour, from the daily 4 hour to the 1 hour before I can come to a conclusion. All right. So, and we have inversion fair value gap here, which we have tapped on and we have reacted off of. So, this whole area is a good area to to expect a change in price on DXY. So I am going to take us to the euro, back to the euro on a daily time frame. And now already this is the morning time frame, in the morning, and we have seen that Monday have delivered inside of the delivered and tap on this very short block again, the high, and decline off of that area. And now Tuesday is already delivering a little bit lower, and we have a fair value gap here, which is confirming this has a bullish order block. They don't lose track of everything, because when you see something, say something, like they usually say. But if, as this has already formed a fair value gap, the next down close candle is this, which might deliver us a little bit higher, but not to take up this high before we go lower. So that is why I'm expecting an what accumulation around this area, because we have two rejection area, but this is more stronger than this. So if price reject here, go higher, come lower, go higher again, the next time we are going to see a sharp move down. So if you are, you should be as a good trader, you should be able to identify this area, these things before, like beforehand. You should be able to identify these things beforehand. So that is where that comes in. All right. So whenever you are coming up with a conclusion for price, you should be able to come up with a reasonable conclusion. Now, and the two conclusion we have now is price is going to what remain, start creating a short time range. This is not going to take a longer time, okay? A short time range. When we get into this bullish order block, we are going to reject, go higher, come back, reject again before going lower. We have this sell side for the daily time frame, and this sell side, which is the major sell side we are looking out for, that this month should be able to take us to this area, or take us below here. Then the next month will take us below it, even if we are going to reverse back into the range, just like we have done here. Sharp move, we reject back. You see how many days it takes us to get back to this area. All right, and look at the fair value gap that we rejected off from, and we get back to this area. So one of the things I knew about this market, there's no a way you can tell me that if you still feel like you are missing out of a trade, then you need to go and update uh, your your technicals and your fundamentals, because whenever price moves sharply lower, if you are smart enough, you should be able to figure out an area where it is going to react from, and it's going to start delivering price higher to fill in those inefficiencies. So the major reason why we have to come back here is because of these inefficiencies in price. All right, and again, we retest to what, a PDRA, which is what, a price delivery mechanisms. I don't know the way this thing is programmed. It's programmed to recognize some kind of certain areas, and also we have to come back to collect the bigger orders. All right. Yes, because there are people having their orders sitting, which is the bank, the commercial traders, they have their orders around this area. So the market needs to actually come back to get their order in order to move efficiently towards the main direction, towards its main direction. So I am going to also give you guys a daily market review for Monday, 6th May 2024. This is the weekly, and I'll just take you guys to the daily so you guys can get some vital information. And that is it. I'm going to provide the daily video, which is going to follow this one right now. So I hope this video is insightful. And if you did have any question, you can uh write on the comment section on this YouTube channel. And if you have any any review for me as well, you can do that because I still get your opinion. And also, please do click on the subscribe button and subscribe to my video. And stay tuned, guys, and have a nice day. That's what I would have to tell you guys. So, just wait for my videos that's coming up for the daily. I'll give you guys what's really needed. So, take care. Have a nice day.